Hello, I'm Jim Adams. Today I want to share with you how I was able to more than double my premium selling options using the wheel strategy last month. I also want to talk about what's going on in the market recently, the downturn we've had, and how I plan to actually manage my trades going through kind of a down market. So stay tuned. I think you're going to really enjoy what I have for you today. Welcome to the Easy Investing Income YouTube channel. This is a channel I set up to share with others how I've learned to actually sell options. I've been on a journey to learn the right way to do it and also the things to avoid or the wrong ways to do it. And I've been able to earn a fairly good passive income both in my brokerage and now in my retirement account. So today I'm strictly focusing on my retirement accounts and I want to share with y'all today how I've been able to actually more than double my premiums that I'm earning in my retirement accounts. So I also want to share with you today what to do during a down market. The last week, the market's been down quite a bit, and several of my positions are in the money. One of them is actually fairly deep in the money. So I'm also going to talk about that as I share with you the shares or the specific positions that I have issues with. I'll go into more detail. I also enjoy really selling options in my retirement account mainly because it's tax free, and I've been surprised how much cash I develop in those accounts. So um, we'll talk a little bit more about that too. And then um, I also want to mention that I'm going to be sharing specific trades. So I do want you to realize and understand that there is risk involved. So if you want to try some of these trades, please do your own due diligence and understand what you're getting into. And then one last comment before I switch over to the spreadsheet and I go through the actual positions and the trades that I did last month. I do want to mention I do have an associated blog that you can take a look at. It'll be in the notes below. And I do have a Patreon um, page that where I've actually got patrons. And if you become a patron, I share all my trades. Actually, at the lower level, at the higher level, I'm going to be doing a weekly um, Zoom call with anyone who joins it, and we'll talk about what we're trading, where we're going, any questions you might have, any concerns you might have. So I encourage you to take a look. It might be well worth your time if you want to have a little extra hand holding or you want actual access to my trades as I make them. So I typically will do a trade and then I'll add it to Patreon right after I initiate that trade. So that all being said, let's go ahead and get started, and let's switch over to the spreadsheet. Okay, I've opened up my spreadsheet, and this is for the month of November. Even though it shows December 2nd, I updated the values on December 2nd, but all the trades occurred in November, and most of the trades occurred pretty early in November. So now I've this is kind of the third iteration of these retirement videos. You can go back and you can actually see in some of my prior videos where I started. Now the initial account value was 50,608. You can see over here, and that was on 9/21/21. And then the initial cash was 12,511. So when I got this account set up where I could do or sell options, I had to increase the cash quite a bit. So I sold some of the securities primarily, and I talked about this in my previous video. I sold quite a bit of the Wisdom Tree, and I also sold some of the IGH, iShares Core S&P Mid Cap, and that was able to generate quite a bit of cash that got me to 12,511. Now you'll notice the current value as of December 2nd is lower than it was when I first started this. This is primarily because of the down market we've had for the last couple of days. To give you a for instance, DVY is at 115. I think it hit over 120, 121, so it's down around 4 or 5%. HEDG, again, Wisdom Tree is down a couple bucks. iShares IGH is down quite a bit. I think it was over 290. So you can see the market coming down recently has lowered some of the values, as well as you'll notice that several of the positions have gotten in the money. So let's, before I explain anything more up top, let's go ahead and go through the trade. So the first trade, and almost all of these were rolls. So I literally, when on 11/8, starting on 11/8, I just started rolling the positions, and I think I only added one new one, which I kind of regret. I'll talk a little bit more about that once we get to it. So the first one is IGH, and I rolled it from 11/19 to 12/17, and I believe I kept the same strike price. Yeah, I did. And here I'm just showing that the current value is 269. It is out of the money. Since I rolled it to the same strike, I didn't really worry about delta at that time. And the premium I picked up $226 in premium, which isn't bad. Let me move this over a little bit more so you can see it. So I was able to earn some pretty good premium. Now the next one again was a roll. I think the last trade of the month was not a roll, but again I rolled from 11/19 to 12/17. This was LEG. At that time it wasn't near the money. Now it is near the money. So you'll notice I show the spreadsheet. I show near money, and I've got it slightly kind of an orange color. So it's for me to stay aware that if the market has another down day, I think it's up quite a bit today. I think it's up 400 or 500 points. But if it was like that yesterday, and by the end of the day it was down at 300 or 400, so for that I rolled it. I did roll it where I picked up a good delta, a 20 delta, and I rolled it to 40. So I believe it was originally 42. So I did lower the strike price, and I picked up 37 in premium. The next one was XLE, which is an ETF related to the energy industry, and it's currently out of the money. And I rolled it again 11/19 to 12/17 and picked up $57. So currently it's at 54, which it's actually, that would make it in the money. So I might need to change that. I might need to change that to in the money. So, well, you actually make a change as we're talking. So let's switch that in the money now. I may have missed that because I did an update 2 days ago, and I think I updated these prices just today. So that one was in the money. So we'll check that each time we're going. ARC is where I took a big hit. ARC, I forget the financial advisor who actually runs it, but it dove considerably. At one point, it was, I think, over 125. It now has dropped. It's showing 100.96, but I believe it's under 100. I think it's at like 99 or 98. And I rolled it again 11/19 to 12/17 to 106. So it's $6-7 in the money currently. But I did pick up $80 in premium. So for this one, I'm trying to decide. I marked ARC red because I'm not sure if I want to keep it or if I want to own it anymore. They shared too that the advisor had purchased quite a bit of Twitter, which I don't know if I agree with that or like the idea of the ETF owning more Twitter. But I'm trying to decide. I still like it to a certain degree, so I don't know that I want to spend 106 per share right now with it being under 100. So I'll probably look to see if I can roll it and gain more premium and lower the strike price, which is typically what I like to do. So let's move on. Bristol Myers, it also is in the money, and I rolled it from 11/19 to 12/17, and I picked up $58, almost $60. But here you can see its current price is 55, and it's a put at 57, so it's $2 in the money. Now, part of the reason it has been hit pretty hard recently is some of what's in the pipeline drug wise. I think recently came out that it doesn't look as good as originally thought, but I still like the company. They still make good money. They still pay a good dividend. So it's one of the ones I probably will, again, I want to own it. So I may try to see if I can roll it, gain some more premium at a lower strike price later in December, but not bad to gain 58. And I think at the time it was still out of the money when I rolled it. The next one is big. That's Big Lots. It's near the money. And let's see, I did a delta of 0.213, which again is pretty close to what I like to get, close to a 20 delta. Now for the BMY, Bristol Myers, I did take more risk, and that's kind of showing now. It's since it is deeper in the money. If I had done more of a delta of 0.20, it would probably be right near the money, maybe not even in the money. So just a thought. I'm taking more risk, and it is getting me into a little bit more trouble. Cisco is out of the money, and again I rolled it from 11.19 to 12.17. I picked up $35. I actually took less risk. It's 0.1789. So sometimes I will pick that just primarily because I like the look of the price at 52 and a half. Sometimes I'll look at what the dividend would pay, and that I believe would be close to a 3% dividend, like a 2.8. So not bad. I could have maybe taken a little bit more risk with that, but it's pretty far out of the money, so I'm not too worried about it. Now AT&T, this might have been a mistake. I may even get some comments. Please add a comment if you think this was a mistake. But I rolled an AT&T cash secured put. I rolled it from 1126 or to 1126 and to a strike price of 25. I believe I've rolled it out again. Yeah, it's down below another. No, that's Ford. I think I've rolled it again to 25 to get it potentially out of the money. But I like AT&T. I actually worked for AT&T. I think what's happened recently is the fact that their dividend's going to go down, and that they're divesting from the media company. I can't think of the name of it right now, but their dividend's going to be, I think, half of what it is currently, but they will get rid of a lot of debt. So there's a lot of people that don't like the CEO. I don't know enough about him to say yay or nay, but it's still something. I only have one contract, so you're talking $2,500, and again, I've owned AT&T for many years, and like I said, I still think it's way too low. I think it's going to come back, and with their revenue and all their assets, I would be surprised if it continues to keep going down. You can see here it's currently at 22.55. So some people are saying they think it might go down to $5. I just don't think that's going to happen. Not something I believe will occur. So I'm sticking with it. Worst case scenario is it gets assigned to me, and I've got a stock that's paying 4.5 to 5% dividend. But for rolling this, I got another $54. Not bad. And then near the money. This is currently near the money. I rolled the covered call for Wisdom Tree and made another $124, which isn't bad. I think I do have two. I either have one or two contracts. It may only be one contract, but I rolled it out. Now I rolled it much farther out, and I guess I did the same thing with AT&T. I rolled AT&T out to 4/14/22, so it's not quite a leap, but it's farther out. So I'm thinking, well, I'll have a little more time for AT&T to come back. Now for HEDG or Wisdom Tree, I rolled it to May 20th, and that's why I got so much premium here. So that limits, I can't really roll it in December unless it comes way down. Maybe at that point I can roll it, but so not sure if that was the right idea, but I did like the amount of premium. So for $124, it seemed like it was well worth it. So, and then I did an out of the money, or I'm currently out of the money. I did a for Ford, and this is one contract. Now I did it for $10. This is kind of a weird play that I decided to do, and it's a leap. So it expires on 1/19/24. So that would assume that Ford would be half of what it is today, which I don't think that's going to happen. They've had some good announcements. So this is another kind of odd play that I had. I don't, if Ford comes up, I may, well, I'll probably keep this because it's only $1,000. I only for the cash secured put, I gained 90. So it's actually not even 1,000. It's like $910. And then let's see. Yeah, it was low risk. Biggest risk is tying up the funds, which with only it being $1,000, it's not that big a deal. So overall, for the whole month, I did $129, which if you base it on the 50,000 in the account, then it's like a 1.6% monthly return or a yearly return of 19.66. Now, the next part of this is kind of relative. My account return, and I mentioned this in my previous videos, between 2016 and 2020 was around 9.5%. This is when I was managing the account myself. And if I combine these two, the 19 and the 9.5, then I get 29.1%. Now that's assuming I do get that kind of return. You can see with the market being down in the last couple of days, I currently, didn't get anything in the account return. The current positions went down quite a bit. So, but over time, you're going to have some down months and some up months, and so in my mind, this is fairly realistic. Is a 9.5, which the total return would be 29.1, and then with the rule of 72, which is just dividing 72 by this 29.1 is 2.47, so I could double my money in 2.47 years. So a really good return. So my goal is by the time I'm 59 and a half, and I'm currently 56, I can double these funds. Now, a lot of that depends on overall the market going in the right direction. Now, if we have a really bad year and there's no return, or we go down a couple percent, then I won't be able to make that. Making this assumption of 9.5 is kind of relates to the reality of what really happens. So we'll see. I still think the market's going to do fairly well in 22. I think there will be more bumps like we've seen recently. And with taking a little bit more risk, there is going to be a little bit more management that's going to need to be done, or managing the trades. Like I mentioned before, I'm going to look at rolling ARC farther out and trying to make more premium with it, with the hope of lowering the strike price. If I have to, I will close it. It is a vertical credit spread, so I believe I've got it at 106 and 96. And those two, if I sell the farther out put and buy back the current put, I would lose about $500. But I'm thinking it's going to come back at some point. I do like a lot of the investments. They have Tesla, they have Roku, they have a lot of interesting investments in ARC. So I'm going to see if I can roll that, give myself more time, and see if it will come back up and get out of the money. And Bristol Myers, same idea. I'm going to try to roll it and see if I can get out of the money for it. And maybe if it does have to be assigned, I'd be okay with owning it at 57.5, more so than ARC at the 106. The other ones, Ligon and Platt, I think that's Ligon and Platt, with near the money at 40, I would be happy with owning that at 40, so I would potentially let that be assigned. And the same with Big Lots at 42 and a half. That's a good value, pretty close to the 52-week low. So I'm going to typically, with trading these each week, I set up what I call a work spreadsheet, and I go through any trades over the next 2 or 3 weeks. I look at any that I put them in that spreadsheet and identify what might be happening with them. Kind of like what I've done here, but a little bit more detail. And I do share that with any patrons that have signed up for my memberships. And this has allowed me to be sure that I don't mess up and forget that one of these is expiring and end up taking a big loss. So that's my spreadsheet, and you can see with the accounts, it doesn't show a great return at this point, but a lot of that has to do with a correction in the market. So if the market comes bounding back in the next couple of weeks, then I should see it increase back to the value it was before. But so that's it. I hope you enjoyed this. As always, please hit that like button, and if you don't mind, subscribe. I can always use more subscribers. And please take a look at my description. I'll have links to both my blog as well as my Patreon memberships. So, as always, I hope you have a great day and happy investing. Bye bye.